All right. So, everyone, thank you for joining us today. I am Sam Sells. I'm going to talk about what the fund that we are launching. There's our co-sponsors, my partners are here on this call. Each has a very specific and incredible role. And what I want you to do today is I want you to listen, to pay attention, because what we're going to talk about is something different. It's unique. It's revolutionary in the impact investing space. Impact investing itself is so different. And then the way that we're doing it really is revolutionary. And we hope that others copy us like crazy because we have a crazy mission to change 1 million lives and we're going to do it. And if you listen and you participate in this call, you're going to know exactly what you need
Hello.
to do to participate in a crazy mission just like
Hi
this.
there.
I'm just going to make sure we're all on mute. Um, Feel free, if you have questions, the best way is just throw it into the chat or raise your hand and we'll answer questions. This is not a lecture. This is a discussion. We're happy to stop, pause, and answer questions as we go. I will do my best to make sure that we keep this less than the next 45 minutes of a presentation. By the time we are done today, you're going to know that you have an opportunity to join a revolutionary new way of impact investing. You also know that you do not have to sacrifice profits for impact, right? Normally you think of, I want to make a difference in the world. I'm going to donate money to an NGO or nonprofit organization. Sorry, NGOs is usually outside of America, nonprofit inside of the United States. I spent a lot of time outside of the US working with IGOs and NGOs and UN and OCHA, all these different entities. All right. So in the States, nonprofits, you feel like you have to donate money to them. That's great. That is great. But you can also do it in a way that creates value and income, dollars into your pocket. You do not have to sacrifice profits for impact. There is absolutely a way to make money helping other people. All this means to you that if you've been looking for a way to build a legacy of impact and wealth, or a way to generate 20 years of passive income from a single investment, you're going to learn about that today, right now. You will know by the time we're done exactly what you can do for less money out of your pocket than investing in stocks, bonds, other retirement accounts. And the bonus is that you can retire with all the passive income you need and live a life of meaning at the same time. It's incredible. It just means we have to shift the way we think about the world. So if you stay at the very end, I promise you, you'll know exactly what you need to do next. And hopefully you feel inspired by this, even if this is not for you specifically. I hope you feel inspired to go out and make a difference in this world. And thank you for being here. Now, let's get into the Impact Growth Fund 1. Now, this says Impact Growth Fund. This is our first Impact Growth Fund. So don't be scared by that. We kept it small so that we can work out the kinks on the administrative side, but the investment side, we know exactly what we're doing on the investment side. We've been doing this for a long time. And we're going to talk about our history here in just a minute. But this is a different kind of fun. I told you this is revolutionary. We're going to buy, in this case, 2 to 3 mobile home parks that will improve over 7,200 lives. And when I say mobile home parks, I'm talking about the ugly, nasty ones that we bought a bunch before and renovated, cleaned them up, turned them into clean, safe, thriving places to live where the crime is gone and people are happy. We're going to return 100% of capital in 5 to 6 years. That's our target, and grow this fund over the next 10 to 20 years. That means you're going to have all your money back. You should have all your money back within 5 to 6 years, and you have $0 in the deal. And then this becomes an infinite return fund because it's going to deliver profit sharing for the rest of the time that we have this fund. I am Sam Sells. I've been engaged in real estate for a long time, since the early 2000s. And then in the military, I got my master's degree in health policy and global health. I spent about a decade working around the world, working with foreign militaries, foreign governments, helping them to create sustainable healthcare systems. I built a lot of 100-bed, 200-bed medical facilities in West Africa, a 500-bed in Asia. Been working in this for a long time. And one of the things that I learned was that when we can align incentives so that people make a profit doing good, then the system becomes sustainable and repeatable, right? Sustainable and repeatable. That's what we want. We don't want to just make an impact that lasts for a few days or even for a year. We want to make an impact that lasts for decades. And John's going to talk about that in a little bit in the video here. We are doing something different and it's got to last. Our team of folks, you're going to say, wow, it's a lot of people. Yeah, it's a lot of people. Why? It's because it takes a lot of coordinated effort to do what we do. All right. So you see myself, my dad who runs our construction. You see my brother, Jesse, who's in Japan right now, enjoying a very needed respite. George Burgess, who's on the call today, runs our international relations and is our fund manager from overseas. We have Satima Gali, who I just spoke to before this call. He cannot make it. His travel plans changed, and all of a sudden now he can't be on the call. Incredible man, just an incredible man. John Weisskopf, who's former Apple executive. We'll talk some more about him. Matt, who's on the call, who is the CFO at Kids on the Move. Adam Clausen, a good friend of mine in Las Vegas, doing incredible things from the nonprofit space. Todd Braden doing amazing support down in Mexico and while also living in Tahoe. Ryan Peterson, former broker, now full-time commercial real estate expert. Tony, retired Air Force guy, now full-time commercial real estate expert. Trajan, our head of green energy, our green future man. Sunday, Black Girls Buys Apartments, just bringing an incredible amount of expertise of working in these very difficult situations to help people. And Monica, investor relations and an impact manager, working with John as a director of impact. And we're going to talk about this. So this is even more into detail about these folks who have joined me. I want you to know that we have the best of the best in this space. All right. Nobody who is involved in this is second rate. Nobody involved in this is here because they want to make a fortune. Everyone here wants to make an impact. And we know that as we create impact, we create value. We also make wealth, create wealth in the process. All right. But none of our first and foremost thing is money. First and foremost, we make a difference. The money comes.
Hi there. I'm John Weisskopf, and I'm Director of Impact here at the fund. Thank you for making the choice to be with us. You know, there are so many choices we make every single day, but to be here is a big one, and we really appreciate it. So what is impact? Well, to me, impact is about intentional choices. In fact, investing is the intentional choice to seek environmental and social outcomes alongside financial returns. You see, impact is a choice. And 20 years ago, when I entered the commercial real estate industry, I made a choice to focus on sustainability. And since then, I've done nothing but had the honor of building an engineering department for Apple Retail's real estate and development group from the ground up. And I helped Apple execute hundreds of innovative and award-winning design investment projects around the world. But a few years ago, as I stood amongst those spaces that I had dedicated my life to, a realization dawned on me. And it was that true sustainability wasn't about the buildings, it was about the impact they can have on life. Today, 14% of Americans live in unhealthy homes. And as humans, we spend over 60% of our lifetime at home. So, as a father of my 4-year-old son, Wyatt, these facts really hit home. And I realized the world didn't need fancy Apple stores and buildings, they needed healthy homes. And so I made a choice to leave behind my 20-year career, my salary, my stock options, and use my expertise and passion, to find others and partners that shared my same impact. And so today, we stand at the precipice of a new era in launching the Impact Pro Fund. Now, I need to be clear, this is not just a fund. This is the anti-greenwashing movement. I called Sam a while back and I said, Sam, if we're going to make an impact fund, there's no way that we can have meaningful impact with a 3 to 5 year hold. I said, we have to hold for 20 years or longer. And I said, nobody's going to give you your money that long, Sam. So we have to be able to give it back and repeat so we can continue to impact and impact over and over again. That was a call. That was quite a call, right, Sam? I called Sam back a couple of days later and I said, Sam, that's not enough. We need to go bigger. We need to do more. And he said, what? I said, I have this thing, this idea. I have this impact scorecard that's going to let us measure, track, and report specifically on our impact. And it's going to allow us to drive meaningful, tangible change and results. And I said, we have to remove all doubt. That's our job. So we're going to measure what matters, from energy consumption and carbon emissions, from the affordability of units to the value added to our residents through credit building, rental assistance, and education, health, and wellness programs. With this one-of-a-kind scorecard, our mission is to set a new standard for this industry. We want to transform real estate investing into a powerhouse of positive, measurable, tangible, and perpetual impact. See, every choice we make can leave an impact. Impact is a choice. It's a choice each member of this fund has embraced and committed to. And it's a choice you stand before today. If you believe that this investment has the potential to impact you and your family, imagine how impactful it could be for residents at an affordable housing property. This is your opportunity to be part of real change, real work, real impact that will echo through generations. This is your choice. Thank you.
We all get to decide who we are and what we will be in our lives. If that didn't inspire you, I don't know what will, but you can see already impact is a choice and it matters who we are and how we spend our money. John realized this building Apple stores all over the world. If you've been in an Apple store, you've probably seen John's handiwork. I realized this building healthcare facilities and working with partner nations and presidents and governments and ministers of health and charge d'affaires and all these different folks around the world. It comes back to who we are and what we do. We decide how we spend our money. And so I want you to think about, what is your money doing? Well, when you invest in an impact fund, we built our investment company and we've been doing these things for a while, right? $8 million already spent on impact. Well, I know we have affected over 15,000 lives. We've worked on 18 different communities. We've renovated well over 450 units. In fact, this week, I stayed in one of our mobile home parks. I stayed there. And it used to be full of crime and meth dealers and all kinds of crazy stuff. We've cleaned that place up. I stayed 2 nights there in one of the mobile homes. And you're like, Sam, why don't you get a hotel? I'm like, because I want to be where the people are. I want to see for myself. I want to walk around at night. And if I don't feel safe, then they probably don't feel safe. But we've cleaned that place up. And it makes a huge difference. Okay. And then Wednesday, I went to another property that we have just started renovating. And oh my goodness, like the difference is palpable. And oh, by the way, the first one I was at, this where I stayed for 2 nights, we've doubled the value of that property in 6 months, 7 months. We paid $500K for it. We put another 600,000 or 700,000 into it. It's now worth about $2 million. Like, you see, there's value. but it's tied to all these things that we do, and the people that we work with make all the difference. And before you say, "Oh, Sam, you guys are just out there loving and hugging everybody and hoping they do good," no, look at it this way from a financial perspective. When one of our residents developed cancer, she couldn't pay her rent anymore, and she was terminal. She had about 2 months to live, and she came to the staff that said, "Hey, I can't pay rent. I've got cancer. I can't even. I got fired from my job. I can't even live." Most places would have kicked her out. All right, seriously, they would have kicked her out. She would have been evicted. She would have gone through the eviction process. She reached out to Star, our asset manager, and Star and Jesse, my brother Jesse, because he's the one. Those two are the ones that do most of the actual stuff that makes the difference. They reached out to some nonprofits and said, "Hey, can you take care of this lady's food and her rent and her bills?" And they took care of her. They got her everything she needed. She didn't have to worry about not having food on her table. She was able to spend time with her loved ones. The last 2 months of her life, she was taken care of. And when she passed away, she passed away. But we did everything we could. And financially, we got paid 2 months of rent. So if all you care about is like, I just want the money, well, we got the money, but we also made a huge difference in her life. Other folks would have just said, "I'm sorry, you can either stay here for free," if they felt bad for her, or they would have kicked her out, and she would have been stressed out and probably would have died earlier, or had worse outcomes. It makes a difference. So yeah, we've done a lot of projects. We have created a ton of equity. We have raised over $1 billion from institutions. I raised over $1 billion from the government, from Congress, House Ways, Ins and Means Committee, transitioning OCO to ODACA funds. We've raised hundreds of millions of dollars from nonprofits before. We've raised tens of $millions of investor capital before and deployed it across these 7 states. But what really matters is not the dollars, it's the humans, it's the people. That's what matters. But we can also do this and make money. So this is what it looks like on one of our projects that we bought. And we took it, just a fantastic trend. Within 12 months, look at that trajectory from 46% occupancy to 83% occupancy, tripled in net operating income. We just crushed it. Like, that's how you do it. And think about it. That's a 245 unit complex. That was 91 new affordable homes on the market. We put 91 affordable homes on the market in 12 months. Where else can you do that? You cannot do that with ground up construction. You can't. But you can with rehab, taking over a distressed property and making a difference. All right. One of the things that enables us to do this is because we are vertically integrated. We have our own property management, and most of the time we have our own property management at these properties. Occasionally we use third-party property managers. Typically, third-party property managers cost us more or less effective and have higher expense ratios than we do in our team. It makes a difference. And that's why we brought property management in-house, because now we can make sure that we are working with our people, right? We can know that we're doing that. When we hire big third-party firms, everybody's a number. We don't want that, because we have this philosophy that impact matters and that our talented team works together. You saw that incredible talented team. We work together and we focus, and that's what makes the difference. We focus on those things that really work. We create those systems, and you've seen those systems that we've employed over and over again. And guess what? We've gotten a lot of stuff wrong over the years. We've made a lot of mistakes. But over that time, we've honed, we've harnessed, we've gotten better and better and better. And we know exactly what we're doing. These systems create profit. We don't drive fluffy numbers. We do things in a way that makes a difference. For this fund specifically, the strategy is we're taking over, recapitalizing, and acquiring mobile home communities, bringing those into the fund, doing it in such a way where we make just a drastic change and difference. Distribute that cash flow and hold for 10 to 20 years. It looks like this in a cycle. All right. We invest in a project here at the top. We do the capital improvements. We refinance, we pull that capital out. How do we know we can pull the capital out? Because we've done it. We've done 10 or so of these mobile home parks. We know exactly how this works, right? Every deal is a little bit different, but we know rinse and repeat. We do it again. Systems generate profit, right? We cash out, refinance, and buy another project, do the capital investments, improve, refinance, and distribute, make sure that everyone's received 100% of the cash flow. Then after 100% of the cash flow has been distributed, then we go to the next step of splitting profits. Now that we're going to talk about profits and projections, we need a disclosure. I am not Nostradamus. If you're young and don't know who Nostradamus is, or George, I don't know, in England, if you guys talk about Nostradamus, you should, but like, you know, an old fortune teller, see the future kind of guy. I don't know the future. I don't know what's going to happen tomorrow, right? Weatherman says it's going to be cloudy. It's probably going to be sunny. We don't know the future, but what we do know from our experience is how things could likely be as long as we follow the systems in place. Things like COVID happen, they mess up all your numbers. It's just going to happen. You have all the 30, 40, 50% increase in prices of goods and material, that's going to jack up our numbers, right? We don't know those things, but what we're doing is we're being conservative, and we have more reserves now in our accounts than we ever did before to help offset, because we just lived through all that stuff. We don't want to go through that again. So here's our projected returns, and we're looking at in the beginning year 1 to 4%, because we're coming in, we're doing all this work, we're taking a project that is ugly, getting rid of all the nasty homes, bringing in new homes, selling them, giving home ownership to our residents, you know, doing, you know, adding more units. So we expect it's going to be a little slow before the trickle of cash starts happening. Every dollar that comes out of that property, 100% of the profits coming out of the property go to investors. That's how we do it until you receive 100% of your return. We project, because we are taking out the refinance. Normally on a deal, you would refinance, all that money would go back to investors. In this case, we're taking out that money and buying another asset, which enables us to double or triple our ability to create returns. That's one of the key powers of this fund. All right. Years 5 to 6, we expect for you to have 100% of your money back, and then split profits 70-30. Now, if you have questions, feel free to raise your hand. This is what a sample return would look like in a fund. Now, compare this to a Roth IRA or something else like that, and you're going to see is quite a difference, right? Low projection versus high projection. If I invest $100,000 into the fund at year 1, all right, and I'm only getting a 1% return, a 3% return that year, or a 4% return. I don't know why I put the pennies on there. It just is. So as you can see, year 5, 16,000 a year, 19,000 a year, 22,000 a year. Now remember, year 5, so you're making a 16 to 19,000, or 16 to 22% cash on cash return is what you would think. But all that money's been returned to you. And all of a sudden, cash on cash returns, IRR, all that doesn't make any sense anymore, because you have $0 in the deal. So what really makes sense is how much money are you getting? Now, if I take my money, my 100 grand at year 5, and I reinvest it into another project of similar returns, 1 to 4%, 5 to 6%. I mean, just really, we're very low projections, right? We're trying to be as conservative as possible. Over the next 5 years, you're making 25 grand a year to 30 grand a year to 40 grand a year, potentially. Year 10, $30,000 to $40,000 a year. Like, some people can start retiring on that, right? Particularly that plus your other things. Now, if you take that same $100,000 again and reinvest it in year 10, all of a sudden things start growing again from $36,000 to $60,000 a year, or $47,000 to $76,000 a year. Now we're talking 5 grand a month to 7 grand a month in your bank account, or 6 grand a month in your bank account. That's retirement. But what if we keep doing it for 20 years? Because we still have the original investment here at year 20, year 25. your money, the same $100,000 you just took out, put back in, took out, took back in, put back in, took out, put back in. You're living on in year 25 between $100,000 a year and $138,000 a year. If you would have done that if you'd have done that for your kids, by the time they're 25 years old or 30 years old, their college would be paid for. They would have funds that they could go and live life and not have to worry about working at McDonald's or Chick-fil-A. I get it. I worked at Chick-fil-A as a kid. I grew up really poor. Like, this would have changed my life if I'd have known this. All right. If you're 30 years old and you want to retire at 55 years old and have 138 grand and you have 100 grand in the bank, like, you could have 100 something $1,000 a year coming to you and you never lose your 100 grand. Your 100 grand just goes to work and comes back. Oh, by the way, did I tell you we have bonus depreciation and cost segregations, and President Trump, love him or hate him, he passed a tax law that made investing in real estate fantastic tax-wise. But what if you're like, I want more? I want more. Well, let's look what happens if you invested the same amount of money or twice as much money. Now, $250,000. We have plenty of people who invest at that amount. If you invested 250 grand at the very beginning, again, year one, nothing to write home about. It's about compounding over time. All of a sudden, at year 25, you're making 280 grand a year, maybe the 350 grand a year. That's life changing, right? I'm sorry, was there a question? All right. So if hopefully that makes sense, but if you invested 250 grand over 25 years, just repeat, your money is 13x, 15x, 16x what you invested, right? It's huge. I wish I would have done this 25 years ago. I'd be sitting on 280 grand a year in passive income from tax advantage real estate, where I'm only paying taxes on a very small portion of that capital. All right. Here's the fund details. I'm not going to read this chart to you. This is a 506 Reg D fund. This is for those who want to dig into this and look at it. Here's all the numbers like we talked about, 70-30 split after you receive 100% of your money back. That comes in year 4, wonderful. 5, wonderful. Year 6, wonderful. It's going to come around that time as we complete the projects and move them and so forth. I don't know the future. That's why we give ourselves a range, but that's what we expect. The debt, the current debt on the project that we have is at 4%. It's fixed rate, 4.17%. You can't get better than that. We have a super low LTV, which just makes it short up for things like 2008 could happen and we would be just fine. Something like 2022, 2023 could happen and this project would be just fine. Once we exit, we're always looking for long-term low interest debt from banks or Fannie Mae, Freddie Mac. In this case, because we're working with mobile home parks, you can still get these agency debt that are really low, secure 30-year amortizations, 35-year amortizations, just beautiful debt that we could hold on to for 20 years and not worry about it ever going belly up or having any issues. As we structure this deal, let's look at the equity for a little bit. So we have the senior debt, which is the loan right now at 4.17% on their first project. 70% ownership is Class A limited partners. That's passive income. You have no responsibilities in this deal other than to pay attention to what's happening. And if there ever comes a time to vote on something, that you participate as outlined in the operating agreement. Now we have 30% goes to the general partner. That's a group of us all working on this project to make it a success. In this one, remember, 70-30 doesn't happen until you receive 100% of your money back. Hopefully I've been very clear about that. In case, here's the fee structure. Anytime you ever listen to anyone talk about a deal, if they don't share the fee structure with you, run, because they're not being open and honest. And so we're being open and honest, and we took our fee structure from what others in the industry are currently doing. In fact, we consulted with our attorneys and said, hey, we don't want to charge too much. We don't want to charge too little. I've done that before in the beginning and I couldn't even pay myself on deals. That's terrible. You don't want that. So what's the right fee structure? And coming back through guys who have done hundreds of debt, or not debt funds, but funds before, this is what they recommended. So we have our property management fee. Normally, if it was an apartment complex, it would be like 3 to 4%. On mobile home parks, it's quite a bit higher. It's 8% of gross revenue, but again, it's a very small projects that we're starting out with, 100 lot mobile home parks. Annual asset management fee is 2.5% on total contributions paid monthly. That helps us keep the lights on and to make sure that we're deploying all the necessary people, staff, time and attention that needs to go to those properties. Acquisition fee, 2.5% of purchase price. Capital transaction fee at 2% of the sell price or the new loan amount. Whenever we recap or we refinance a property, we have people, guarantors need to get their they put themselves back on the line for this new loan. I know because I'm a guarantor in a bunch of loans. And if anything goes south, then I've got to pony up and pay for the project out of pocket. We don't want that, but that's the way things are. So this is our fee structure. If you have any questions about it, we're completely open and honest. Again, 100% of the profits from operations go and refinances go to LPs until you've received 100% of your money back. And then it gets split 70-30 outside of the fees. All right. Bonus and accelerated depreciation. There is a law right now trying to recapture 100% bonus depreciation. It started back with Trump did 100% bonus depreciation, but like all good politicians, they make it expire as soon as they get out of office, and they use it as a lever so that they can get re-voted back in. He didn't get voted back in. Biden did not reinstate it. And so it's been reducing 80%, 60%, 40%, meaning that we have less paper losses to wipe away our profits. It's not going to mean that much difference to us, but if it does go back up to 100%, you can expect just an incredible amount of tax deferral, or not tax deferral, but tax reduction on profits in these deals, because we're doing all this work. Our depreciation expenses are huge. And I always have investors call me every single year saying, Sam, what happened to all my money? I got this K-1 investor distribution form for the IRS. It has a negative number instead of a positive number. I thought we made money this year. And I'll say, yes, you did make money, but you also lost money. Your money's still in the deal, but you should be saying, Sam, thank you, because now I have this big negative number that goes on my taxes. And how that gets applied really depends about your situation. Tax code is crazy complex. I have no idea how it's going to apply to you, but for me, it just wipes away my tax burden. All right. Investment risk. Every investment has risks, right? Everyone. These are the ones that we've worked to mitigate. These are the biggest issues that I've seen in my time over dozens of deals in the commercial real estate space where we were running the operations. Number one is interest rates moving up and down. The easiest way to lose your deal in the world, in commercial real estate, is to have a variable rate note. And something happens like 2022, the feds try and kill us by raising rates by 500%, and it just crushes your deal. All right, so what do we have? We have fixed rate debt. That's the only way to stop it. Have fixed rate debt, fixed rate long-term debt. In this case, we have fixed rate debt at 4.17%. Great. In about a year and a half, 2 years, we're going to refinance this debt out and get a new fixed rate debt because we're going to pull all of our cash out. Next, cap rate exit price. What happens if we're trying to sell and we're not going to get the sell proceeds that we want because cap rates have been expanded, meaning cap rates have gone up, sell prices have constricted like we've seen over the past year. Well, we don't care about that. What we care about is debt service coverage ratio. That's how we underwrite to 1.3. I got quoted 1.17. We're working on a HUD conversion right now. What does that 1.17 mean versus 1.3? Well, it means a much bigger loan, a much lower interest rate. It means a much better deal. So we underwrote to a bad deal, and we still get to where we want to go. Net operating income, pro forma targets aren't achieved. This happens, right? Pretty much all my deals when COVID happened, screwy things started happening to our profits and losses, because all of a sudden tenants didn't have to pay rent and waiting on COVID funds. It was interesting. All right, so we've been doing this for a while. We do our best to project the future. We don't know it, but we do our best, and we create lot only mobile home parks. When you're only trying to capture 350 bucks a month or 400 bucks a month, it's much easier to get there, particularly when the people own their mobile homes. They don't want to get evicted and have to spend $10,000 to move their home. All right. Refinance. What happens if the refinance falls through? I've seen this. We had 7 refinances in the works when COVID happened, and every single one of those fell through. It happens. If the agencies were still lending during COVID, and so what we're doing is we're converting these mobile home parks to a agency debt standard. And by that, for those of you who work for the government, if it checks all the boxes, it works. And so if it fits, it ships. We're checking all the boxes, and we're making sure that we can secure Fannie Mae or agency debt. Cool. All right. This is the actual project. Here's our actual budget that we have set up. This is our first one, Peaceful Lane Village. We acquired this property some time ago. We actually bought it right before, literally like right before COVID. We ordered brand new homes, 23 legacy homes in 2020, and it took almost 3 years for those homes to show up because of all the supply chain constraints. So what we're doing now is we're recapitalizing this project, exiting those people who are in there now, taking it back over. We're buying 2 more plots of land. We're expanding this entire park into a 100+ mobile home park. This is in Lubbock, Texas, on the same street as Texas Tech University. It's a great place. It's across the street from the golf course and country club. There's developments happening all around us out there. It's a great place. And we've already done a lot of the work. We've already paved the roads. We've already done a lot of the other work. Now it's time to recapitalize, capture the rest of it, expand it, make it bigger, and turn this into a amazing asset with brand new homes. We're going to spend a little over $3.4 million, around $3.4 million or $2.4 million on the work on this particular project. This is what our sources and uses. This means the money that we need to do all of this and more, how that money is being utilized, legal, admin, reserves, the money that we're putting into the reserves, our fee right there, and so forth, buffer to make sure that we can cover cost and so forth. And that's where all the money comes from. Bank of Montgomery at 4.17%. That's our debt, folks. That's gorgeous. And of course, the impact fund of 3.75 million. By the way, if you know of anyone that has a better loan product out there than 4.17% on a mobile home park, it does not exist. If it does, please let me know, because I'm going to give them a lot of business. All right. If you're thinking like, do I really want to invest in a mobile home park? Yes, you do want to invest in a mobile home park, because it is the last bastion of affordable housing. It's the last true bastion. And people say, well, mobile home parks appreciate in value. Yes, they do. But that doesn't mean they don't provide value. All right. And they don't go to zero. They never really go to zero until they're 50 years old. But those things, if you keep up with them, they last for decades. We've got homes in our parks that when we buy them, they're 60 or 70 years old. They're tough to tear down, surprisingly. So it's hard. It's hard to provide really true affordable housing to people. Where else can you buy a $50,000 house? It's 3 bedrooms, 2 baths, washer dryer, brand new, with a yard and a fence. Like, where else can you do that? You can't. Not only that, municipalities have been getting rid of mobile home parks for a very long time. And we have found, just like Warren Buffett, just like many others, Sam Zell, many others massive investors out there, that mobile home parks are an incredible investment, and they provide an opportunity for us to give back and make a difference. So why us and why now? One, alignment matters. It really matters. We're all focused on creating impact and profits. And we want you to come join us on our collective journey to make a difference in the world and to build our own legacies of impact and wealth, right? This is 20-year journey, and you only have to have your money in this for 5 years or so. And then you're going to receive money for the next 20 years. I mean, that's amazing, right? Impact growth. We're growing. This is what we do. And not only that, as you invest and we refinance, that money comes out cash free. So you're avoiding capital pains of paying capital gains taxes. Don't pay capital gains taxes. We're going to push that down 20 years down the road. And if we just keep rolling it in or refinancing, it's there, right? You don't have to pay the taxes on it. Affordable housing crisis, John talked about, it's incredible. It's just incredible. And it's getting worse and worse and worse. And not only that, distressed market conditions for the next few years are creating great buying opportunities. We're seeing incredible buying opportunities out there right now. They don't pass what we can do on the recap here, but they're great. And we know in a couple of years when we're taking this thing out, that we're going to have another project out there that we can acquire and continue this path. So what in the world is the difference between a fund, an infinite return fund, and a single asset syndication? If you ever invest in a syndication, it was probably a single asset. You're not diversified. You're not mitigating the risk of that single asset. If that asset fails, you're toast, right? Your returns typically can be stabilized. Your long-term growth is limited because you're only doing a 3 to 5 year deal. And syndicators want to do 3 to 5 year deals because it makes their IRRs, internal rate of return, look higher, and it's easier to sell quick deals to people. We're not here to do quick sells. We're here to make a big difference in a big way and create impact and legacy. And so it's different. There's an infinite return fund. Now, if you're like, I only do single assets, come talk to us. We have other projects out there that are single assets. This one's different. This one's important. We mitigate risk by being in various markets. We stabilize returns over multiple projects over long-term growth. The downside, if any, is that we don't know what asset it is that we're going to buy in 2 years. And so we take the risk of having to look. And you have to take the risk of believing that we have the ability to select good assets. Now, we've done dozens of these projects, hundreds of commercial projects if you put us all together. That doesn't mean we don't make mistakes, but we know what we're looking for. And it's got to be something we can put our money in and get all of our money back and more, right? Bottom line, we believe investing in communities where we can create the biggest impact is the hallmark of true investing that goes beyond the chase of dollars, right? We're not chasing dollars. We're making a difference, and the dollars come. It's just a flip of the script. It's just a change of our paradigms. We make a difference, and then the money comes, and it's incredible. It's just incredible. When you see this, you're going to be astounded. And John, with his and the team working through and creating the measurable impact, the scorecard. We use scorecards. I help develop scorecards overseas. It makes a huge difference when you can look at a program and tell what the scorecard is. But guess what? Nobody else has a scorecard for impact investing in multifamily or in mobile home parks. Nobody has one. So John created the first one, folks, and we are doing something that nobody else has done. This is revolutionary. We are going to track how good we are at impact, and we're going to get better. You cannot get better if you don't track it. If you are an accredited investor, if you are seeking meaningful investment, if you desire long-term cash flow, all right, cash pays bills, equity, nada. You can't go to McDonald's and buy a hamburger with stock options. You can't go buy a hamburger with your equity or with your house is worth $200,000 more than you pay for it. You can't buy anything. You can't buy groceries or anything. Cash pays the bills. So this is a cash flow focused investment that creates dollar bills so you can pay the bills and retire for real and make a difference in the world at the same time. If you're looking for a team of experienced and proven industry veterans who are fun and easy to work with, then that's us. And honestly, there's nobody else out there doing what we are doing, period. So if that's you, if you are ready, then commit. And the way that you commit is by going to that link there. You can reach out to myself, Monica, or John, Matt, Tony, George, if the person who brought this to you, reach out to them and say, okay, how do I invest? How do I get access to these documents? How do I get to read the legal documents? How do I get to join this fund? Go to that link or get the link from one of us. Get in there, dive into it, read knowledge, gain knowledge, right? Then take action. You'll need to provide your proof that you are an accredited investor is what's required by Security and Exchange Commission. You have to verify. If you're not sure how to do that, you can get a third-party verification letter through InvestNext. You can work with your CPA or an attorney. And there's some other ways you can do that. Feel free to reach out to us and we can tell you how to do that if you've not done that before. If you need to understand what an accredited investor is, we're happy to walk through that with you as well. Once you have submitted that, then you get access to the documents. Review and read the legal documents, please. Please read those legal documents. I know they can be difficult. I know it can be legal gobbledygook. It's like going to the doctor and you're like, it's my chin, and they call it some other different Latin name because they just want to sound smart or talk a different language so you don't understand. Attorneys like to talk a language that we don't use. But read that, try and understand that. If you have questions at all about the legal documents, please feel free to reach out to any one of us. We've all read the legal docs. We know what's in there, but we are not attorneys. Even better, go find an attorney who can help you understand. There's not gotchas in this document. These documents are here to protect you and to protect us from things that can happen at the property. Somebody trips and falls and sues us. This happened to me before. Somebody tripped and fell at a property. They were walking around a tree, tripped over a root on the ground and hurt themselves. Terrible, sad. They sued, insurance took care of them. We did our best to take care of them. That happens, but that lawsuit's not going to come against you because you're protected through these documents. Private placement memorandum, the subscription agreement, which ties you to us in this investment, and the operating agreement, which governs the way that we operate the entity. Once you've read that, sign those documents and fund. Now, we will not have funding available for another couple of weeks, and then you'll get notified. As long as you committed into the system, put down what you think you'll invest, you will receive a notification when we're ready and have opened the windows. This is a small $3.75 million fund. I expect it will go fast. So please sign up. Please make sure that you get notified. If you can't invest, that's fine. It's no guiltiness. But if you're ready, you want to make a difference, and you have the capacity to do that, then do it. Now that you have the knowledge, take action and do it. Folks, it's been an absolute pleasure to talk to you guys all about this. We are ready. We began late March. Here we are launching this thing. This will be a first to fund, first serve model, meaning that if you sign documents but you don't fund, if there's some issue with your IRA, please let us know and we will hold that space for you. But otherwise, when the fund is full, the fund is full. and we'll close. Okay. If you have any questions at all, feel free to use this with your phone. You can click on that link. Trying to get tech savvy here with these things, but feel free to reach out to myself, Monica, Brendan, and take a step that's going to change your life. I told you in the very beginning that by the end of this, you will know exactly what you need to do to create and start building a legacy of wealth and impact. Now you do. Now you know. It's up to you to decide, will I have impact or not? It's totally up to you. No pressure, no sweat. I don't know what they say in England is similar to that, George, but no worries. If this is you, then let's go. If not, cool. If you're not a credit investor, please come talk to me. I'm happy to help set you on a path where you can get involved in projects like these in the future. Now, we've talked about a lot of stuff. You've listened to a lot of Sam Sells yap in the whole world, as my 6-year-old would say. Do we have any questions?
Sam, you may have addressed this, but let's make sure everybody's clear on what the window of opportunity here is. Obviously we're ready to go right now, but let's make sure everybody knows that it's not an infinite opportunity, that there is a time frame in which you need to act.
That's absolutely right. Thank you, Matt. So the time to act is now. Get in there. It takes time. If you haven't invested with us before, you got to fill out or get in there. It's not too much. It's not too hard. Just get into the system, invest next, and in there, make sure you load your accreditation form or verification. Sometimes that takes a couple of days just because you need to go find one or get one from an attorney or your CPA. Load that in there. We approve it. We're usually really quick to approve, sometimes within a few minutes or a few hours. And then you get access to the documents. The legal docs are like, I don't know, 100 pages long. So 110. It takes time to read through that. I want you to be diligent. I want you to understand what you're investing in. This is a no pressure investment, like no pressure. But when you understand what you're doing, if you have any questions about the property itself, because we didn't go too far down into the property itself, I'm happy to talk about the property, happy to talk about anything else. But the window of opportunity is between now and we hope to wrap this up by the end of April. Right. Thank you, Matt. Great. Matt's our CFO, folks. So he's thinking about the money. And not his first time being a CFO, by the way. He's been a CFO for a long time of a big organization. All right. What is the minimum investment amount? Great question. The minimum investment is $100,000 for this investment. If you are a accredited investor, that should be just fine. If you're not a accredited investor, again, come and talk, and I'm happy to set you on a path where you can become an accredited investor and give you some tips. When I started, I only had 30 grand to my name. There's a path. There's a path to get there. John?
Hey, Sam, one question I see a lot of people ask or maybe aren't clear of is, from a passive perspective, I think some investors sometimes feel that they're not actual owners because they're off to the sidelines. So can you just talk to people about what their actual ownership is? Do they have rights to go visit the property before they invest now, before we buy, things like that? I think that usually see that question come up often.
Yeah, this is when you invest in a stock, you're an owner of the company, but you have zero rights. This is different. All right. You are an owner of the property. You actually own a piece of the property. If the worst case scenario happens, a court would order that owners get paid back. Okay. With whatever proceeds from a property sale. You are an owner. You have an entitlement and a right. to the profits of the project. If we disobey the operating agreement or go outside of the operating agreement without getting certain permissions by investors, then you can sue us and win in court. There's actual, there's definitely things that you have access to. Now, if you want to go see the property, go see the property. All right. If you're going to go there and you want to talk to property managers and people, for heaven's sakes, please coordinate, because sometimes somebody calls us and like, somebody here just said that they own this project, but I don't know who they are. Like, who is it? Oh, okay. Yeah, that's so-and-so. Yeah, they're an owner in the project. And just if you could, please coordinate. We're happy to do everything we can to take care of you guys. If you go to the property and you're like, man, it's dirty, let us know, because we've had one instance in all my time where a property manager was like, oh, it's so clean. I've done all this work. And we hadn't been there in like 2 months. And it was a lie. It was a filth hole. So we regularly visit our projects, but it was like once a quarter. And when we went there, she was let go. All right, because we don't tolerate lying. That's bad. How does one become an accredited investor? Great. So the general requirements are $200,000 a year or over $1 million worth of net worth outside of your personal home. Now, if you're coming from a place of lack, then the path to get there is through our syndication launch program is one path to get there, Angel, and you're learning that path right now. So that's the path. You have to have at least $200,000 a year in income for the past couple of years and reasonably believe that you will continue to make that much money, or 300,000 combined with a spouse or co-filer, whoever you're filing your taxes with. And then there's some other things like you're in a family office that has over $5 million of investments, or you're licensed with Series 7, maybe 11 securities license. There's some other things that you can do out there. But generally, that's it. All right. Will we do cost segregations? Yes. So we will do cost segregations every time we buy a project. And so every couple of years, you're going to have a massive amount of bonus depreciation coming your way. This can be fantastic. If you're a real estate professional, this is fantastic. This is how you pay zero taxes. If you have a lot of passive income, this is also a great way to reduce your tax burden. Just really depends on your personal situation, but I know this is a big issue for a lot of folks. If you're paying $300,000 a year in taxes, stop. I mean, legally stop. Pay your taxes, legally pay your taxes, but use the tools that have been given to us to reduce our tax burden that the government is begging us to use because it's in the tax law. 98% of the tax law is all about how to not pay taxes. Cool. All right. Any other questions? All right, everybody. Thank you all for joining. This recording will be shared, and go out and make a difference. I've seen a few of you already register to invest. Fantastic. Thank you for taking action. And again, if you have any questions, please feel free to reach out to any one of us and we will take care of you right away. All right. Thanks, everyone.
Thanks, Sam.